Hi everyone, today let's talk about the PPI results, then we'll talk briefly about the US auto worker strike that's potentially coming, as well as the economic data. Then we'll get into the charts, as well as my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So PPI prices went up higher than expected, just like CPI. So inflation is on the rise for sure. It's definitely showing in the data here now. Core did rise by 0.2%, which was in line with estimates. So we did see the headline going higher, which was the same as CPI. Core month over month yesterday did go up a little bit for CPI, but PPI core in line with estimates. And on a 12-month basis here, you can see PPI increased to 2.1%. Its lowest annual rate since 2021, so overall it's not terrible. It does seem like we've normalized a little bit, but again, energy driving prices higher, 10.5% rise on the month. Gas prices up 20%, big rise on energy. Food prices, final demand goods rose by 2%, services 0.2%. And then gas station sales also rose 5.2%. So pretty interesting to see demand going up on fuel while prices are going higher. And it'll be interesting to see if this trend continues to hold into the next report. Moving into the auto worker strike, this just seems abysmal. We have 146,000 workers gearing up for a strike across General Motors, Ford, Stellantis. And they're asking for a 46% pay hike over 4 years, which is absolutely massive, completely ridiculous in my opinion. And they also want more things beyond that, including some other benefits as well as retirements. And currently they're paying $66 per hour for these labor costs. And with these demands, they could see that go up to $136 per hour, which is absolutely bananas. So at $136 per hour, if you were to work a 40-hour week full-time, and then you worked 52 weeks a year, that is a massive amount of money, above $250,000 per year in terms of labor costs. And it's not like these automakers are really even making that much money. These are mature companies. They're trying to fight with Tesla on the EV front. Their margins are pretty tight already. Ford has a massive amount of debt on the books, and GM went bankrupt just a few years ago. So it's not like these companies are rolling in cash, and then you have these unions trying to get even more money, which I would consider an astronomical amount of money on a per hour basis. And this goes back to the yellow truck strike that we saw previously, where the company just went bankrupt. They were asking for massive amounts of money. The company hadn't made any money in a while, and they had a bunch of debt coming in, and they just went bankrupt right on the demands. And based on that, now there will be no paychecks, there will be no retirements, and you're starting to see these unions just take too much advantage of these companies, in my opinion. Not to say that unions haven't done good things in the past, but it just seems like they're going beyond their mandate. $66 per hour is already pretty high. $136 per hour is ridiculous, and I just don't think it's sustainable for these companies. Moving over to the economic calendar, we had the ECB raising rates. So their deposit facility went from 3.75 up to 4%. And you have their rates, just like our Fed rates, going from 4.25 to 4.5. PPI month over month in line. Core retail sales jumped a little bit. 0.4 went up to 0.6 from expectations. Previous read was revised down a little bit. Jobless claims basically in line. Headline month over month, more than expected. Retail sales month over month, also at 0.6, just like the core numbers. And then Fed balance sheet, they sold off about $2 billion worth, not a whole lot. Moving over to tomorrow, there are a few things on the calendar, but nothing super pressing. We are getting some Michigan expectations for consumer sentiment, inflation expectations. There is a lot of data, but none of it is super important. Moving over to Max Payne, it is still sitting at 440, stock price at 450, definitely interesting. We have that call wall at 450. I don't expect to close above that number tomorrow. Doesn't mean that we can't see a little bit of a rally and then a pullback, definitely interesting. Options actually went down a little bit, put call ratio went down a little bit, but still watching for a finish between 445 and 450. I guess you could argue that a 451 finish wouldn't be crazy either. These calls make a little bit of money, but all of these 450 puts would expire out of the money. And that would mean we were not going to move basically at all from current prices, maybe down slightly, pretty much sitting right at that peak. Moving over to the charts, starting off with the SPY, we went on a run here with retail sales, gapped up, hit this level, rallied right through it, rallied right through this trend as well. You can see on the daily chart, we stopped right at that longer term trend line. On the hourly chart, we're just a little bit above it here, but we're still within this wedge. It's continuing to hold, so we dipped down, set up a bottom, set up a lower high, set up a higher low, and now we're chopping right into this zone, waiting to see what we get in terms of direction. So the triangle still intact, bottom held, continuing to rally into that resistance. In terms of momentum, daily momentum turns slightly bullish. Lots of volume on the day with the retail sales data as well as PPI. You can see we did get overbought conditions on the hourly chart and a massive volume candle on the last candle of the day, which looked a little bit bearish in my opinion. So it's definitely something to watch going into tomorrow's session. Moving over to the NASDAQ, very similar thesis. Did dip down a little bit more early in the session, hit that 200 on the hourly chart, ended up holding that level and then rallying up to that next trend line. Still a very bullish day, 0.82% on the daily chart. But in terms of structure, basically no change here. Still moving into this wedge, still consolidating, waiting to see what kind of direction we get. At this point, you have to expect a push to that upper trend line, and I would expect a rejection from there. Of course, you have to watch it closely. If it breaks out, that could be interesting, and start to look for a push back up into these 289 areas at these previous highs. That could be interesting, but right now you have to respect the structure. Moving over to the Russell and the Dow, strong economic data pushed these markets much higher very quickly. You can see the Russell tap that level at these previous lows just for a moment down at 182.77 and then rallied up super aggressively up to that 55 EMA and then paused on the 4-hour chart. Bullish momentum, bullish volume. Looks pretty good here now. It's holding right at these previous highs. You would like to see it get above that 55 EMA and then start to rally back up to this 189 area. In fact, I'm going to add a trend line here at 185.63, right behind current prices, right at these previous highs. I want to see it hold above that level. As long as it continues to hold, that should look pretty bullish, potentially looking for a test of that 144 EMA at 189.70. Similarly on the Dow, got above this level, rallied pretty much up to the next one. We talked about that happening, potentially get above 347.67, which it did. It held at that level and then pushed almost to 350.92. Next level above that, 353.62, obviously watching for that clear break. Last time we got into the zone, we gapped up, rejected from that level, and broke down pretty significantly. So pay attention to that. Still bullish momentum. RSI bullish, but not overbought yet. Volume stepping up, confirming that rally right now. Overall, this looks like a low, higher low setup. You have a high waiting for that higher high in that next zone. Moving over to Apple and Tesla. Apple touched the 144. We've been watching that for a while. Finally touched it here today. Bounced from that level up to my next one at 176.15. Did not get above it, so we're currently looking at a potential rejection from that level. If it gets above it and holds, you can start to look for a potential move higher, looking at a double bottom. We have a midpoint here. You could look for a break higher. Definitely interesting. Momentum still not bullish yet. RSI still bearish. Tesla, on the other hand, had that slight dip. We're getting the continuation, still looking at 280.06 for the price target. If that breaks, we're watching for 302. Moving over to consumer staples and consumer discretionary. Staples continues to rally, coming off of that 21. We were watching for that. Got the break of the 72.50 level, so staples showing some bullishness. We're above all the shorter term EMAs. Next level is up at 73.82 right here, and then I have 74 as horizontal resistance. Overall looks good. We got the breakout of this midpoint. Higher low setup looks clean. Similarly on discretionary, we had a low, higher low, higher low. We're at this previous resistance here at 174.76. We're 1 penny above it here after hours, so we're pretty much right at that level. As long as Tesla continues to rally, we should expect discretionaries to continue to rally. I do have trend resistance up at 176. If that breaks, I have 180.10. And the last time that we were at that level is going back quite a while here, all the way to April of 2022. So that could be a pretty significant breakout and could trigger kind of a parabolic move through that area. Moving over to breadth here, you can see both of these charts had a massive move higher. This is kind of what we were looking for, and this does confirm a rally in my opinion. I don't know if we're going to get it this week just because there's so many options in the market and we're looking at that max pain finish. But if this continues to hold, we got the 50-day average setting up a solid base. It's been here for a while, continues to hold, and then we got this nice bullish spike above the 9 and 21 EMAs here. Similarly on the 200-day average, we're above the 9 and 21s. Bullish momentum on both charts, RSIs moving higher, and this looks super bullish here to me, probably the most bullish of all of the charts. And if we get this follow through, this could be an absolutely massive run here to the upside that could take several weeks to culminate. Moving over to the dollar on the hourly and the daily, you can see this absolutely massive move on the dollar with the data out this morning. The economy is still strong. The dollar went higher with it despite the inflationary data. You could argue that the inflationary data is also good for the dollar. So you have strong economy, strong inflation, which means higher rates for longer, which means stronger dollar as well. Definitely interesting. Looking at this daily chart though, you can see we've gotten to overbought conditions twice. We're looking at overbought conditions almost one more time. Probably going to hit it while we hit this longer term trend line. It's interesting to see markets going higher and the dollar going higher this powerfully. Really, I would like to see this sell off tomorrow a little bit, and that might drive markets a little bit higher. This is really my biggest concern with that bullish bias. Moving over to JNK and TLT. JNK gapped up, showed a bullish day, and JNK really confirmed the rally yesterday. It was a pretty weak rally, but JNK went higher, and JNK did it once again, so this still looks bullish, confirming that rally. TLT breaking down once again from that 21 EMA. Just seems like TLT is kind of done here while yields sit basically at their highs. And you can see volume on that move pushing lower, momentum pushing lower. TLT looks weak, probably going to push back down into this 92.50 area. Moving over to the volatility indices, MOVE index continues to waterfall off after that breakdown retest continuation. VIX, we are back at that longer term trend support. Definitely interesting. Last time we hit this, you can see we had a nice little spike. If this breaks down, however, we can look down to 1177. Momentum bearish, RSI bearish. It does seem like we're going to go lower here, which does confirm that bullish bias. But if this holds and we start to see a little bit of a rally from that level, that could be an indicator that it's a false move higher. So you do have to pay attention to that. Interesting level, something to watch. Moving over to my accounts here, I did make a few dollars. I was not as active as I could have been, partially because of work and partially because the move was during the pre-market. And since I trade options, I can't adjust to that quite as much. I could have taken better advantage of the Q's move, but like I said, I just wasn't watching the markets as directly. I did sell a put here in my IRA account. That was a max profit, as well as a put here on the IWM. I actually sold a 184 initially and then rolled that up to 185. So made a few bucks there. I think this loss here on these calls is a little bit exaggerated. I'm interested to see what that ends up being once these shares are assigned to that call. So I did allow my core position to come off here today. I do have a put going into tomorrow at 376. I do think that level on the triangle is going to be a little bit powerful, but if we see a nice breakout along with breadth going higher tomorrow, that could be a really strong indication that we're going to be going higher for the rest of the month. Typically, the end of the month after this options expiration is a little bit weak, so that is something to pay attention to, but that breadth breakout is quite convincing. Let me know down in the comment section what you think of the inflation data. We talked about it yesterday. Is it going to be a trend, or is this just a singular event and we'll tip back down after this iteration? And also let me know your thoughts on the automaker strike potentially coming up. Do you think it makes sense for them to demand $136 per hour for labor? Or maybe they should be paid in stock, so if they continue to take away the company, the stock price will continue to go down and they won't make as much money anyway. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.